Kim Darwaza here, and I haven't done a monthly market report since before the holidays, so I wanted to go ahead and do one. Things are pretty much very similar. Um, so basically, number one question I still get asked are we going to have a bubble or is the bubble going to burst? And my answer to that is still no. 35% of houses in the United States do not even have mortgages. 63% of homes with mortgages have positive equity, and only 2% have negative equity. So with the price appreciation, there's very few people who would have to do a short sale or a foreclosure. If they really needed the money or they lost their job or couldn't pay their mortgage, they would probably most likely just sell their home and would probably make money, pocket it, and walk away. The second question I get is, has home price acceleration peaked? I don't think it's peaked yet, but I do think it's starting to plateau with some type of properties. Inventory is always the telltale sign, and we are still at record lows. I think our inventory is down 15 to 30% down over last year on the national average, and we usually are the higher end of that, any of the percentages. I'm not seeing a whole lot of inventory, so there's still a lot of contracts on properties. Again, everything around here is based on location to DC and schools ratings. Those are still the main drivers of our real estate market here. I think the condo market, the prices are plateauing a little bit. Again, obviously in Arlington, it's a different situation, but condos are staying on the market a little bit longer, and there's usually, I did do one, there were 3 offers on it the other week, but we got it at the contract price, at the list price, so it wasn't like crazy. But then, I went to a broker's open for an agent I know, and she had a listing in my area, and she said, "What do you think about the price?" And I said, "I think whatever price you put it at, it's going to sell for $200,000 more, because there's very few homes in Oakton for sale in the Oakton Pyramid, and they all tend to go aggressively over list price with everyone waiving everything still." So, again, just depends on where you're located. If you go out to Great Falls and you get into that $1.5 to $2 million range, the houses tend to not go as quickly, because with Georgetown Pike, like I've said before, there's one way in and there's one way out. And as lovely as Great Falls is, people love location and ease to get to highways and ease to get to things. So again, if there's a specific area you're curious about, I've probably shown property in that area, so you could just text me or PM me, and I'll be happy to tell you what I'm seeing in that area. Showings are still crushing pre-pandemic numbers. So we've had single showings since the pandemic, where you schedule your time for 30 minutes or 45 minutes or whatever, and you're the only agent in that property. Well, now we're starting to get into overlapping appointments again. So some properties will have overlapping appointments, some still do not. And when I go show a property, it's like I'm getting there, the agent that was showing it before me is there, I'm there, the agent who's showing it after me is there, and then there's always an agent who doesn't adhere to the rules, which actually is an ethics violation, but that's a whole nother conversation for another day. So I always feel like whenever I'm showing a property, there's at least 2 or 3 other agents there, and this is sort of in the mid-level housing. Once you get closer to 2 million, then yes, you're the only person at the house. But when you get in the range that is the more popular price range, so that would be $1 million and under here in Fairfax County, then there's tons of showings. So, and showings did not lag over the holidays this year. A lot of times they're very quiet during the holidays, and that did not happen. So still a lot of pent-up buyer demand. And the pending home sales are higher than pre-pandemic, but lower than they were a year ago. And what that means is that we just have less inventory, we have less homes for sale. So obviously there would be less pendings, because if there's only 10 homes for sale this year versus 20 last year, then obviously only 10 could go under contract and 20 could before. So the biggest opportunity right now is for buyers who own properties and have a lot of equity in their current homes. It gives them more flexibility with their monthly payments and to buy more expensive properties, and it makes their offer stronger. And I have a lot of buyers that put 30% down. Like, it used to be 20%, but now because they're buying more expensive homes, they put more money down to keep the mortgage lower. And then nationally, it was about $57,000 in equity gain last year. It was closer to $80,000 in the Northern Virginia market. And this equates to about over 31% gain in equity in your home. The home price growth reached the highest level in more than 45 years. And it is cheaper to have a mortgage than to rent in every major city. I just had an investor client who bought property that they're going to rent out. The price appreciation, because it was a condo, was not as high as other properties. So it was about $10,000 per year. It was in about the $350,000 price range. And everyone's like, yeah, well, you're buying a property, it's costing you more money. Well, the rent is $300 more per month that they can get than they could this time last year. So you do the math on that one. And as you will see, $300 more rent is a lot more than a purchase price of $10,000 spread over 30 years. So home ownership and the ability just gives you the ability to build wealth, and home equity separates the rich from the poor in this country. Homeowners right now have an average of $294,000 in equity, which is at a historic high. And some interest rate projections, because I get asked about this, and this comes from Fannie Mae, Freddie Mac, the National Association of Realtors, and the Mortgage Bankers Association, and then they all sort of have their different levels, and we just sort of average them. So Q1, they're saying it'll be at about 3.3. So we're in Q1 now. Q2 will go up to about 3.45. Q3, it'll go up to about 3.55. And Q4, it'll go up to about 3.7%. So still historically low. I bought my house in 1999, and I think our interest rate was like 7.5%. So it's still almost like half of what that was. So that is my quick and dirty monthly market report. Not a whole lot more to report than I have been, but I am actively out there showing houses in different neighborhoods in Northern Virginia. So if you have any questions, I'm happy to answer them. I'm happy to give you a home value report, and I have a software I can set you up on too called Digs, and it sends you a monthly report based on what's sold in your neighborhood, and you plug in like how much your mortgage is, and then it tells you how much equity, and then you just automatically get a report once a month to update you on that. So I'm happy to sign you up for that if you're interested. You can just call, text, email, or PM me, and thanks for watching, and have a great week.